Greetings everyone, Shama here, bringing in news and updates and providing you some insights on how these things are affecting our lives. But before we're going to proceed with the video, I want you to hit that like button, smash the subscribe button, and share this to your friends and family if you like this content. And just for full disclosure, please take this for educational purposes only. And with that being said, what's in the news? An opinion made last November 9 entailing that the Central Bank of the Philippines should start weakening the peso in order to stimulate the economy. Simply because the monetary policy is not working for the current situation. What does that mean? It just means that people are not spending enough. Well, at least not how we used to. As of now, the BSP is keeping its policy rate at 2.25%. Which is at historic low. This means your savings account is earning that much or lower year on year. On top of that, the central bank had reduced the required reserves for local banks. Do remember though that required reserves is technically the amount of money that BSP is requiring the banks to hold in their treasuries. Going back to the news, the rationale for weakening the peso is to entice spending. At the current rate, which is about 48 Philippine peso per USD, foreign currency holders like the OFWs are quite reluctant in exchanging to Philippine peso. Similarly, businesses who buy Philippine exports are unwilling to buy our goods because they deem it as relatively expensive. So, how does weakening the Philippine peso help in this case? Well, let's start by understanding how does BSP going to do that. And it is simply by printing more money. Are they allowed to do that? Yes, ever since. That's how some of the monetary policy works. And what do they do with all those extra money? Well, to buy foreign currencies and then stocking them up in their reserves. Here is a simple graph on the exchange market between Philippine peso and the US dollar. The demand for the USD is shown as the downward sloping line, while the supply of the US dollar is shown at the upward sloping line. And the intersection of both lines shows the current exchange rate, which is about 48 Philippine peso. So in order for the Bangko Sentral ng Pilipinas to weaken the peso, they need to buy the US dollar. This will drive up demand of the foreign currency, shifting it outward. As we can see here, yes. As a result, we now see a more expensive dollar relative to the Philippine peso. So, yay! Isn't this good news for our Filipinos from abroad? In the short term, yes, but in the long run, it will not bode well for us here locally. Why? Well, let's see this news from the US Central Bank. Since September, the US Central Bank, the Fed, made a clear statement that they will keep their rates low for a long time. Or at least until they will see a sustainable above 2% inflation. So what does that got to do with us? Well, like how we explained earlier about keeping the exchange rates low, the US will also keep on printing new dollars. And when they do that, the supply of the US dollar in the exchange market will increase, shifting the supply curve down. For this case, you can see here, like that. As a result, our earlier higher price Philippine peso to USD will again start to fall down. And if these two central banks are insistent on their policies, your savings account, your money you have hidden under your bed or in your grandma's closet will amount to nothing. Remember back when we can still buy chips with just 5 Philippine peso? But now they cost at least 20 Philippine peso or more? Well, the same thing will happen or worse soon. Well, anyways, it hasn't happened yet. But the US had already made their stance. Let's just see the BSP's next move. Well, we've reached the end of the vid. Again, if you like this video, and the content. Your support is much appreciated. Thank you and have a good day.